After going public in 2010, Tesla stock has increased by more than 2,000%. Production growth, EV fever, and frontman Elon Musk have all fueled the raging rally. However, many Wall Street analysts believe Tesla's inflated stock price is doomed to burst. Tesla Inc. has a median price target of $727.5, with a high estimate of $1,200 and a low estimate of $67 among the 30 analysts providing 12-month price forecasts. The median estimate reflects an improvement plus 8% over the previous price of $673.59. Don't forget to subscribe to the Stock Monster for more riveting material if you want to stay up to date and on top of new inspiration to grow financially. Stay with us with only one click on the bell button. Let's begin with Tesla stocks crashing down. And do you need to buy stocks now? The Tesla stock crash. Tesla shares previously slammed, according to Daniel Spark. At market open, it was down more than 7%. Further declines pushed the stock down to almost 13% at one point, but by 10:05 a.m. EST, it was pushed back to about 8%. The drop in the electric car maker's stock is most likely due to increased bearishness in the overall market. Tesla and other high-growth stocks have taken a beating. Tesla, the world's hottest stock for more than a year, has entered the bear market territory. Tesla's shares dropped 6% on March 9th after falling 8.5% on March 8th, wiping out its year-to-date gains. The stock hit a high of just over $883 on January 26 and has since plummeted. Tesla shares hit a low of $619 on Tuesday, the first time they've been below $700 since December 31st. It was Tesla's most significant drop since September 23, 2020, when the stock fell 10.34%. Apple, Amazon, and Microsoft all closed down more than 2% on March 8th, putting pressure on the company's big tech peers. Tesla's stock may have also been weighed down by Bitcoin's slowing rally. According to CoinDesk, the coin was purchased about 6% after the bell. Tesla announced earlier this month that it had purchased $1.5 billion in Bitcoin to give it more flexibility, to diversify further and optimize returns on our cash. The company also stated that it intends to adopt Bitcoin as a form of payment. In a research note published over the weekend, Wedbush Securities Analysis Daniel Ives stated that the firm is on a trajectory to make more from its Bitcoin investments in all of 2020 than profits from selling its EV or electric vehicles. Reasons of Tesla stock crash down. Bitcoin is, in view, the smart step for Tesla at the right moment, but it is also playing with firecrackers, adding risks and uncertainty to the Tesla narrative. Wedbush Securities' Daniel Ives, a tech analyst, remains bullish on Tesla stock. Earlier this month, Tesla revealed that it had invested $1.5 billion in Bitcoin. According to some estimates, this fueled the recent Bitcoin rally, netting Tesla a fast $1 billion profit, more than it has ever generated from selling cars in a single year. However, in response to a critic of Tesla's Bitcoin investment, Musk tweeted on Saturday that the prices of Bitcoin and Ether, another cryptocurrency, do seem large. As a result, the price of Bitcoin XBT fell 9.3% in trading March 8th, possibly dragging Tesla shares down with it. Model Y pricing. Tesla slashed the price of its cheapest Model Y and best-selling Model 3 cars by $2,000 each on Thursday. The ordinary range Model Y, which can fly 244 miles on a charge, now costs $38,490, while the standard range Model 3 costs $34,590. However, the Model Y's cheapest normal range edition vanished from Tesla's website over the weekend, leaving only the SUV's more costly long-range and performance models. Tesla did not explain its decision. They believe the reasons are either the mix was skewed too heavily toward the cheaper version, either there wasn't enough demand for the lower version, causing margins to suffer, or there wasn't enough demand for the higher variant. Gordon Johnson of GLJ Research is one of Tesla's more bearish critics. People claim that the recent price cuts demonstrate that Tesla vehicles do not have the demand that its supporters say. Tesla's new factories can't keep up with demand without price cuts. On March 8th, Johnson wrote this message: "We value your enthusiasm, so don't forget to subscribe to Stock Monster's YouTube channel and ring the bell to be informed of new episodes, and keep watching." Investors got ahead of themselves. Tesla stock reached a high one day before the company released a disappointing earnings report on January 27th that fell short of Wall Street's analysts' expectations. According to the earnings, profits from selling regulatory credits to other automakers outpaced its total net income. Critics such as Johnson have argued that it demonstrates Tesla's inability to make money constructing and selling vehicles. Although by some other profit measures, Tesla is still profitable. Musk also mentions a shortage of batteries required for electric power vehicles during his earnings conference call on January 27th. Despite having its in-house battery supply and ambitions to increase battery production, Tesla is having trouble building more cars. Right now, the most significant constraint for electric vehicles is the complete availability of cells, he said. Musk says, for example, that if Tesla had the batteries, it would have already started producing a semi-tractor. Shares are still way up. Tesla stock soared 743% in 2020 as investors welcomed the notion that electric vehicles will be the way of the future. Tesla is also the world's most profitable automaker, with a market cap far above that of the following 8 biggest automakers combined. Despite the recent downturn, Tesla stock had risen nearly 1,300% since October 2019, when the company shocked investors with a third-quarter profit, sending shares soaring. Tesla's stock, according to some investors, has risen too far. Many analysts, however, believe Tesla will recover. They have a $950 target price for the next 12 months. Nevertheless, he has issued a cautionary statement. It's buckle up the seatbelt time for Tesla stock again, with more uncertainty on the horizon, he has said. Should you buy Tesla stock after 35% drop? Tesla stock has dropped negative 22% in the last 5 trading days and is down close to negative 34% in the previous month. Although there hasn't been much specific news about the sector, rising bond yields and higher inflation expectations weigh on growth stocks in general. Stocks are priced based on discounted potential cash flows. Investors were likely less concerned about whether earnings were available today or in the future due to the ultra-low interest rate environment that followed COVID-19. This helped growth stocks like Tesla TSLA, which is expected to rally by around 8 times. Investors are more hopeful about the economic recovery now that COVID-19 cases are on the decline and vaccines are being carried out, driving bond yields higher. In just over a month, the 10-year U.S. Treasury rate has soared from about 1.1% to about 1.6%, prompting investors to reallocate funds to more cyclical and value stocks. Tesla stock recovery. Following a negative 22% drop in the last 5 days, Tesla stock has a good chance of rising in the coming month. Now, what does Tesla's long-term outlook look like? Tesla stock is still expensive, priced at about 135 times consensus 2021 earnings, but it will rapidly expand into this valuation if the company performs well. Tesla recently stated that it expects to increase deliveries at CAGR of 50% per year over a multi-year period. This implies that it will be selling nearly 40 times the amount of vehicles it currently does by 2030. If the current growth rate is maintained, while many factors must fall into place for Tesla to reach these levels, the company has demonstrated its ability to rapidly increase manufacturing capacity, with its Shanghai plant going online in record time and its factories in Texas and Berlin starting production later this year. Tesla stock rebound after 17% drop. Several factors are fueling the sell-off. Investors are likely betting on a faster economic turnaround, pushing capital away from technology and high-growth stocks and into more cyclical and value stocks as the COVID-19 vaccine rollout gain traction and U.S. COVID-19 cases decline. Furthermore, following a rise in bond yields, the tech sector saw a dramatic sell-off last week. Tesla stock has been especially hit hard, given that it has risen by more than 8 times from its March 2020 lows, and now trades at a lofty valuation of 160 times consensus 2021 earnings. These were the information on CCIV stock and what you need to know about it. Make sure to leave a like and subscribe so you can join the Stock Monster squad and be a part of the channel. Thanks for watching!